Are HEX debts interest-free loans, not including indexing?
So yes, student loans are interest-free loans, but the outstanding amount is indexed annually by the Consumer Price Index. All student loan debts are managed by the Australian Taxation Office. An individual commences repaying their loan debt when their taxable income reaches the repayment threshold. So you get a job and you start earning a certain amount, that would be when you would start repaying your HEX debt.
Can you explain how your HEX debt influences your ability to get a loan?
Loans are all about serviceability. If you're earning an income and a certain portion of that is getting repaid as a part of your HEX debt, the bank or the financial institution that's assessing your serviceability would need to know that you're repaying that amount. So obviously that part of your income is apportioned to your HEX debt, and when you've cleared your HEX debt, you've obviously got more money available from a bank's point of view to service that loan. So the quicker that you get to pay off your HEX debt, the better. Or possibly look for an employer that might cover the costs of your education while you're working for them. That's what the Defence Forces do quite well, to try and encourage people to come and join them.
If I miss a payment on a loan, what happens?
I think the key to missing a loan payment is communication. So if you know that for one reason or another you are going to miss a loan repayment, you just need to communicate that with your lender, just so that they're aware. Banks obviously have a contract with you. When they loan you the money, they're saying, right, every week or every month, you're going to repay X amount back to us. And if you don't do that, and you don't tell them that you're going to do that, it's not ideal. There's lots of factors and there's lots of reasons why. But if you can give context to your lender as to why that situation is, there's always going to be a workaround. However, in saying that, if you're constantly not repaying, that is potentially going to impact whether you're going to be able to loan money in the future, because there's records of all of that, and the banks are going to know this person, for whatever reason, is a bit sketchy when it comes to repaying their loans. So that might affect you in a negative way moving forwards in your life. But the same can be said also for overdrawing your account or declined payments or withdrawals. If you're at the shops and you know you've got $10 left in your account and you tap and go and it's $11 and it declines, that's a record that will sit within the system.
Can you talk to us about what a good debt to have would be?
A lot of people would say no debt is good debt. Personally, it would be very unusual for a person to go through their life without some sort of debt. And debt doesn't necessarily have to be negative. It can be a positive thing, because let's think about real estate, for example. I don't know too many people that have got $500,000 just sitting in their account and go, oh, I think I'm going to go and buy myself an apartment this weekend. So what happens? We have to loan money from the bank. But that then provides us with something that historically tells us is going to increase in value. That to me would be something that I would consider a good debt. My boss brought up a good point actually. She talked about car loan as good debt. And I was thinking to myself, a car loan? Cars don't increase in value generally. But she said, what about you don't have a car, you're on public transport? That would potentially limit your employment opportunities. So if you have a car, you can maybe get a better job because you've got more access to flexible working hours. You can travel at unusual times perhaps. And so I thought, yeah, that's right. That would be a good debt, because whilst your car physically might not be increasing in value, the opportunity that having a car is going to give you in terms of job and earning money is a positive thing. But yeah, as a general rule, pay things off, pay your debt off as fast as you can.
Is there any way that I can avoid having debt?
Yes. I wouldn't say all debt, but some debt is basically to have a plan or a budget. You need to be realistic and set yourself some goals. And I would encourage you all to try your best to be good savers. It's easy to get into good habits when you're young. I'll tell you a story about I left school when I was 16 to become a chef. I had to move out of home. I had to move from Newcastle to Sydney. But my mum set up for me 2 accounts straight away, and she said, right, this one your pay is going to go into, and every time you get paid, we're going to take a portion of money out of your pay and we're going to put it straight into your savings. There is a saying that you should try and save half of your income. I think that also depends on your situation. I had to pay board where I was living. I had to get myself to work. I had to pay some incidentals. I certainly wasn't saving half of my income, but I was saving an amount. And as I went through my apprenticeship and I earned a little bit more and a little bit more and a little bit more, that amount of money that I put into my savings increased to the point where when I finished my apprenticeship, I'd saved $20,000. That set me up for what I needed to do in the future. I needed to buy a car. I wanted to go on an overseas holiday, and I had the money there to do that. And I'll never forget my dad when we went into the car yard to pay for my car. We sat down with the used car salesman. He got the finance guy to come over, and he just assumed that I was going to need finance to buy my car. And my dad said to him, "No, mate, he's saved. He's got cash." And I paid, bang, straight outright for my first car in cash with money that I saved. And that was a great feeling. It just, I guess, set me up for good habits throughout my life. So, yeah, if you guys are working now, I would suggest, if you haven't already got a savings account, that you get yourself a savings account with whatever financial institution that you choose to bank with, and start getting a little habit of moving some of your money every time you get paid into that, so that down the track, when you want to start thinking about making bigger purchases, obviously you're going to try one day, hopefully maybe to buy your own homes, you're going to need a deposit. So if you start now with those habits, it's certainly going to set you up down the track. And it shows the bank that from a very young age, they can go right back through your history to see that you've got good habits and that you are a person that is potentially going to be a reliable person when it comes to repaying your debt. There is ways to avoid debt, but I guess being a good saver will limit how much debt you're going to need to get into.